The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
And welcome. This is Dave White sitting in for the one and only Tom O'Brien. And we've got markets that are rather quiet today. And that's why we're going to, at the bottom of the hour, have our commodities expert, Mr. Andy Heck, come on in. And in the meantime, we're going to talk about what is moving in these markets. Like we said, though, commodities are the ones that are moving. Gold's off about 1.6%. We've got silver off about 3.6%. And Andy's call that basically thought this was in a trading range looks pretty good from about 12.25. I think it got to 12.27, but we'll be looking at these. But I do digress. That's a digress that is a request of a digress. But, you know, as we go through the markets right now, not a lot of movement. We're off 2 points on the S&P cash, 2.36 billion shares. Volume is probably going to be fairly light during most of the trading day tomorrow. 2 o'clock tomorrow, we do have the Fed minutes coming out, and I think that's going to be it for volume for this week, at least in the equity markets. And most of the action's going to be in commodities probably now. I guess commodities never sleep. I guess we can probably put it that way. Well, the big men at Wall Street had a tough winter. They decided to leave early for their Hamptons vacation, and we're seeing that in the lack of volatility in this market. We had a little bit more. We were down to 21.25 as a low today, and they started coming back. But the equity markets, they can push them around, especially in light volume trading. And I think there's kind of a gentleman's agreement on Wall Street that they won't do anything stupid so that they all can at least go for vacations. Pretty much the same thing happens from about the 15th on in December, and few less of those kind of things. The reason we are seeing a great deal of volatility in the commodities markets is because of one man. This man's name is Benoit Coeure, C-O-E-U-R-E, which is French. I'm not exactly, I took German, so don't blame me. This gentleman basically came out and, as I like to say, dropped the Baby Ruth in the punch bowl last night. Just to a select group of his buddies over there in Europe. And that actually was everything that you needed to know. They went out and acted upon that information before it became public and really started a move, especially with a market that it has a fairly decent lack of liquidity. That's in the bond markets. We saw the 10-year yield go to 2.3%. We saw all the other things that we've seen in the past. The TLT, a little weaker this morning, but basically what we know is that that downtrend is intact. And if you're looking at a trend line, I don't think you can say that this ends anytime soon. Certainly when you're looking at the TLT, it's busted through the previous support levels. And when we look at it, you know, you've got that 118.21 that we kind of tested today, but certainly with a great deal more volume. And I think that's the story of today. 118.21 of November 3rd of 2014 had 10 million shares. We already have, well, what do we have out here? We had 15 million shares on the 12th. Today, a little lighter volume and a little bit of a bounce out here, but we've already broken that low and broken it with volume. My guess is that what we're looking at next over probably the June is this move down to the 112.73 level in the S&P cash. We've got other things going on out here, so we'll try to zoom to them as quick as possible. But it is, like I said, a quiet market. We've got some stocks really moving. If you missed the previous hour, which I host 5 days a week, of the winners, we basically have the stocks that are in the second tier of retail clothing, Ross Stores and TJ Maxx. Those basically TJ Maxx came in and really surprised a lot of folks. On the downside, Urban Outfitters was the dog of the day. Down fairly strong. Looks like it's going to go back and test its not all-time lows, but its lows from November 18th of 2014 at $27.87. Doesn't look like there's a whole lot there to save them after the kind of volume we got today. It'll take a while, maybe the rest of the summer. My guess is that we are going to see that 27.89 tested in Urban Outfitters before we see any kind of movement. I was reading during the break why some people thought that Urban Outfitters wasn't doing that well. And there were a lot of surveys from the younger kids that go to the store. Basically, they said, we're broke. We don't have a lot of cash. So we go and look at Urban Outfitters and we buy clothes that are kind of the same at about half the price in some of the other retail chains that aren't as well known. And I think that continues to be it. Kids are willing to throw all kinds of money at smartphones to get an Apple. But they're becoming awful wise and thrifty when it comes to buying clothes. And so we see a tale of two clothes retailers, Urban Outfitters to the downside, TJ Maxx to the upside today. Now, other things in the news, if you missed it, I covered this in the hour before, but I think it's significant to understand. We've got Skyworks Solution, one of the big suppliers to Apple, is trying to break out into all-time highs. One of the reasons I suspect that we are getting this is the last day and a half or so, the news has slowly been trickling out about the Chinese and basically the government of China trying to get in and steal the secrets from Skyworks Solutions. Their secrets are about a RF filter. RF filters are kind of black magic in the scheme and thought of electrical engineers. You can spend months, years, and a lifetime working on a proper filter. There's no easy answer for RF filters. They are, like Harry Potter said, black magic and the black arts. They're not something you can just point a computer at and try different things. A lot of things don't make sense at all, and only a lifetime of succumbing to the black arts of RF energy, radio frequency energy, can get you the kind of knowledge you need. Basically, they were looking for these filters that basically target very specific frequencies that your cell phone works on. You know, if you're around a cell tower, there may be 20, I think there's 20 or 25 major frequencies on each cell tower. And of course, each company has a different range, a frequency range that they're on. And there's going to be 25 frequencies around them. And there's a whole bunch of tricks that go in on how those frequencies can be compacted to use the least amount of bandwidth for sending phone conversations out, and also, of course, data now. So what China wanted was all these, all the basic intellectual property that Skyworks had. They were going to start their own company, build their own devices. But before Skyworks Solution could patent it, they wanted to go patent it in China and say, hey, we didn't steal it. We patented it. You stole it from us. Ha, 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 ha. Well, the jig is up, and that's exactly what happened. They arrested somebody, I think, yesterday or today. The article was somewhat vague, other than the fact that 4 more people that were perpetrating this scheme to steal the intellectual property of Skyworks Solution are still in China, and it is unclear if they're going to get a pass by the CHICOM government and not be forced back to testify when they were probably put up against it by the Chinese government to begin with. I think you can probably look at it that way. But up a little bit, and started to see a little bit of movement yesterday. I think that the information was starting to leak. I didn't see this till last night. But again, we continue to see international secret's not so secret. We're more interested, I guess, in our U.S. government in handing over data about military movements, and the Chinese are much more interested in stealing what they can sell back to us at any point in time. Other stocks that are moving out here today are, of course, the stocks that are recent IPOs, but at the same time, those IPOs fairly thinly traded. They didn't put a lot of shares out to begin with on it, and we're seeing a few of those have a little bit of a short squeeze. At the bottom of the hour, we got Andy Heck along with us. We're going to talk commodities for the last half of the show. Got one more segment. We're going to talk about what's moving and what's coming out after hours.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Pro is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And this is Dave White sitting in for the one and only Tom O'Brien today. In about 10 minutes, we'll have Andy Heck, because most everything moving today actually are commodities. It's kind of a light week out here, but commodities never sleep. So we're going to have Andy in here. He's got his own show at 5 o'clock tonight, too, and he's got some articles on Seeking Alpha. So go check those out. He's got a new one today, and we'll talk about that when he comes on here at the bottom of the hour. Printing off at 21.25 and change, off a little more than 3 points in the S&P cash, 2.5 billion shares on the consolidated New York Stock Exchange tape, which is a little better than I probably thought of today, but we're at the ends of options rollover. We've got a few futures rolling over today also, and I guess that's all we have to say about that. But in the meantime, wanted to look at what's happening after the bell tonight. Of course, most of the movement we're having in a lot of these markets is happening after the bell and before the bell, from anything from ECB people talking out of school to earnings after the bell. Tonight, after the bell, is Autodesk. Really getting a clear view on this thing. It is down with some significant volume today, so that's going to be rather interesting. But I looked at the options. I looked at this, not getting a real good, clear view of movement in Autodesk either way. So the question is going to be, just like Walmart this morning, how much are they going to talk about how the dollar is hurting them? Of course, overseas, we've got one of these stocks. If you've not listened to my show this last few days, we've been talking about how the analysts on Wall Street know that full out that probably 5% of all these internet companies in China are total frauds. And my comment to all those folks would be, would you get on an airplane if you know that there was a 1 in 10 chance that you weren't going to get off the other end? Even if it was 1 in 20, would you get on that airplane? Too much risk for me to play Chinese internet stocks, but what else can you say? Anyway, not a lot of movement in this one. There is, at least in the options, a good look. They are expecting a big move in this, either up or down. So I think of the two out here that look interesting for action after hours, Quaihu is one of the ones that looks most likely to move before the after hours, let me put it that way. Other things going on. What we talked about that. Oh, I had some other things out here I wanted to get to. I think a lot of people didn't know how big a deal the issue of buying more bonds was, but not going to impact even the UK that much, but they were up 0.4%. Germany, of course, is the big winner, with them buying a lot of those bonds up and front-loaded this summer, up 2.2%. France was up 2.1%. Spain was up 1.4%. Portugal up 0.5%. Italy was up 2.2%. Even the Greeks were up 2.6%, which gives you some idea of how that's moving. Anyway, other stocks that I wanted to get to in this segment before we get Andy Heck on. We talked about kind of the last ones. Momo is an interesting stock. It was up 22%. Very unknown to get something out of this one. But these are the kind of stocks that you do want to watch. And if this thing could come back to 13 bucks or so, you might want to be looking at buying this. Of course, way too much movement here to actually get. But when you're breaking out or building a base to break out of, this is the kind of stuff you like to see out here, and that is a lot of sideways movement, and that is going to be it. But I do digress. But Momo, in fact, let's get the headlines on this company. Anyway, heavy volume, and basically it's just the earnings release. I didn't see a whole lot else out on this. The earnings call came out this morning at 9 a.m. before the bell. Basically there's a lot of discussion about whether or not it's turning around or not. Let's get their profile here. And anyway, mobile-based social networking platform in the People's Republic of China. Company's platform includes its Momo mobile application and various related features, functionality, tools, and services that are provided to users, customers, and platform partners. It's that's it. Okay. Momo been around since 2014, founded in 2011. Not a whole lot out here. And of course, these Chinese companies, who knows if what they tell you is correct or not. But that is it. To Norwegian Cruise Lines. Kind of interesting. We brought this up, I think, in the hour before, but wanted to bring it back up. And that is that we do have some movement out here in a few stocks that are breaking previous highs, where we get the stocks that actually talk to us, tell us what they're doing. Not a whole lot out there. This one at least has got decent enough volume to match the previous high. We're looking at this go out at the April 10th high at $55.38. We got above that, and we're holding above it. So I'm wondering if these cruise lines aren't telling us something about the value of the dollar, and that is people probably spending a lot more dollars here in the United States. I know we're going to be talking commodities with Andy Heck at the bottom of the hour here, but even the AAA said that this is going to be one of the most traveled weekends in, I think, 10 years, I heard him say. And that is that it is a issue that, how can I say this, that the dollar is, and lower fuel prices that the stronger dollar has given us, is certainly making a lot more people think about driving for their vacations. And I think that's what they said. It was going to be the most driven vacation in the last 10 years. So that will be pretty much it. No, that's it in one. Other things I wanted to look at as we have time. Urban Outfitters, we talked about that line. This one's got hit, and I'm not exactly sure why. Announced an offering offering additional shares. Announced an offering of 16 million units representing limited liability company interest, which priced to the public at $11.79 per share, down 10% today. Lynn Energy. A lot of these companies are coming back to the well for additional shares, and we need to be watching these closely because, we had a lot of these kind of in March and April. We haven't had any for about 3 weeks. And I think a lot of people are trying to get ahead of those bond movements to get more shares out there. Of course, as bonds go higher, it's probably going to be tougher to dump shares out of these companies that are sucking a lot of wind out here. Anyway, we'll have Andy Heck in the bottom of the hour. He'll be on in just a minute. And I don't know what else we have to say about that other than what's really moving today, commodities, the dollar index, all these things. Not so much the equities. Pretty much see that coming. We'll be back in just a minute.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we should have Andy Hecht on the line any second here. In the meantime, we're going to continue on. But he's calling in right now. Are you there, Andy?
I am here. Hi, Dave. How are you?
Fantastic. Anyway, we've got a lot going on in commodities today. I kind of brought it up earlier in the show, and that is that we had this, I don't know what you would call him. He's with the ECB, a bureaucrat, probably the best description of him, Benoit Coeure. I don't know, Coeure.
Sounds right.
Yeah, he's French. I took German, so I can't take that. But anyway, basically get in front and tell everybody that we were going to buy bonds, but because everybody is on vacation in August, we're going to buy a ton of them. A little quicker than everybody thought, but we're going to buy a bunch of them so that any kind of dip in August that would be out there because everybody is on vacation for 4 weeks in Europe, that we're just going to get over that, but didn't send that document out to everybody. And basically, there was a cadre of his close buddies out there that got to trade on that information before anything else happened. But anyway, just very curious out there that kind of some good old boy kind of stuff going on. But that rippled into gold and silver today, rippled into crude. It basically rippled into everything. We had the dollar index up. Let's go take a look at that real quickly.
About 1,100 points.
$1.04 on the dollar index, 95.26. So we're probably going back to that 96.30 area and test it here fairly quickly. Anyway, that's my take on it. You basically had a good call of maybe gold being a trading range till what, 12.25 or so. I think it got to 12.27 or so. As far as
it actually got up to 12.32. Let me just pop a chart up there.
Okay.
The futures got up yesterday to highs of 12.32, which was kind of like at that point it was kind of broken out above the thing, but above the resistance, but really didn't last. And I think, look, this dollar, as you said, it's rippling or reverberating across all of these commodities. I mean, without exception today, you have a correction in the dollar and a correction in commodities. You have oil down $2.25 a barrel. You have gold down $20, silver's down 61 cents, platinum's down $28, even coffee's down 3.5 cents. Sugar, is not doing much. You have cotton down. The grains are all down. So you really saw the true inverse relationship between the dollar and commodity prices. And by the way, copper down 7.5 cents. That was probably, the best correlation between commodities and the dollar recently has been in the non-ferrous metal sector. Copper got very strong when the dollar corrected. And today copper's down 7.5 cents, which, as you know, Dave, that's a big move for the copper market.
Do you believe, I think one of your buddies says that copper has a PhD in economics. Do you believe that?
I think copper is probably the most sensitive commodity in terms of global growth, particularly China. I don't know if it has a PhD in economics. I mean, he's putting the cart before the horse when he says that. So I think that, it really reacts with it. Does it lead it? I don't think so. I think today it more follows. It's more of a follower today, but it does lead the other base metals, and it does tell us certain things about commodity prices in general. It is Dr. Copper. I like calling it Dr. Copper, but as far as a PhD in economics goes, listen, copper is just very, it's used to build infrastructure in growing nations. So China is a huge buyer of copper and has been over past decades. I think it's very reactive. I think it's the most sensitive metal. I think it's a deeply sensitive metal. How's that?
That's good. Do you think copper tells us more about the United States or China?
I think it tells us more about China. I think it absolutely tells us more about China for two reasons. Number one, the U.S. is the number 2 consumer of copper in the world. China is number 1. But China is also a huge stockpiler of copper. And why is that? Interest rates in China are higher than they are in the U.S. and certainly higher than they are in Europe. So there's a tremendous amount of copper tied up in financing deals in China, because it's really kind of a currency play. What they can do is they can borrow and finance in foreign currencies a lot cheaper than they can in their own domestic currency. So they can buy a lot of physical copper and finance it and store it. And then when China begins to grow again, they'll be able to sell it off to local firms that are building infrastructure. So basically there's huge stockpiles of copper in China because of these financing deals. Therefore, copper is much more sensitive to the Chinese economy than it is to the U.S. economy today.
Do we know how much additional copper is over there? Is there a glut?
It's huge, but one of the big problems when you talk about doing fundamental research in a place like China or a place like Russia, Russia is a big demand side of the equation in commodities, and certainly the government holds strategic stockpiles because they are such a big producer, and China is such a big consumer, and they're also a producer, but they're a huge consumer. But when you have these planned economies, they view their statistics on supplies, on reserves, and so on and so forth as state strategic secrets. So they don't have the USDA coming out with the fundamental report. They don't have the EIA coming out and giving you an energy report on a weekly basis. Basically, they massage the data and let out what they want to let out. So I never really trust data that comes out of China or Russia because of that reason.
I did see something. I don't know if it was which one it was, Amazon or somebody else, but the number one thing that people are now ordering in Russia for import outside of the country
is
seeds for their home gardens.
Yes, that makes a lot of sense. We got to eat, right?
You got to eat, and I guess you would think that if that's the number one thing that they're buying, that food again is starting to get in short supply, mostly, I guess, because of the sanctions and the issue with sanctions in Russia. But why would, it seems grains seem to be a strange thing that really would react to what is a fairly small move in the dollar, right?
Mm-hmm.
Why would that be? Is it more of an economic weapon?
Why do they? Let me clarify the question. Why are you asking? You're asking why they're going lower, or you're asking if they're sensitive to the geopolitical landscape?
I guess that the question is it really the dollar, or is it the geopolitical landscape?
Oh, grains. Right now, grains are all supply and demand. You got huge crops from last year of corn. So the silos are filled, even with last year's corn. The last 2 years, we had bumper crops, right? Mm-hmm. So now we have silos filled, and farmers are planting, again, a lot of corn this year, even though the prices dropped down to $3.60 a bushel. The U.S. is the largest producer and exporter in the world of corn and soybeans. So as such, as an exporter, the dollar does affect the price level. If soybean prices, if the dollar moves in such a way, Brazil is also a big soybean producer, so they can fill in the market. And when the dollar gets strong, it becomes soybean prices tend to react and move lower with the stronger dollar. Having said that, with these grains, it's all supply and demand, really, and it's all weather. It's really the weather that affects these things more than the dollar or anything. Weather and crop disease when it comes to the agriculturals. Now, wheat is a funky commodity because while the U.S. is the biggest producer and exporter of corn and soybeans in the world, Dave, when it comes to wheat, we're only like number 3, and it depends how big our crop is. And wheat is, I always say, wheat is the second most political commodity in the world, second to oil these days, and probably historically the most political commodity in the world. If you go back to the French Revolution, Marie Antoinette was supposed to say, I don't think if she really said it, she said she was quoted by someone as saying, let them eat cake because there was no bread in the stores. If you look back at the nascent beginnings of the Arab Spring in 2010, 2011, it started as bread riots in Tunisia and then spread to Egypt as the price of bread went up. So wheat is a very political commodity.
I'm about ready to riot because the price of chicken and my chicken wings is going up.
Oh my God, I know. Every time I feed this bird flu, I'm worried about you.
I'm the king of chicken wings. Now, just because I have never asked you this question, what do they feed chickens?
They feed them grain.
Okay.
A lot of corn-based grain.
Is that really going to, with all the chickens they're killing, is that really going to add on to corn too?
Oh, there's so much corn around. I don't think it's going to hit. So it doesn't matter at this point.
Anyway, we're going to go to break. We'll come back, and we got a few more questions to ask.
Yeah, let's
Andy
talk about
this
chicken
last-
wings after the break.
I love chicken wings.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
And this is Dave White sitting in for Tom O'Brien. I'm here with Andy Heck. And we're talking commodities because they tend to be moving the most. If we look at a couple of stocks, Mr. Loco, El Poco Loco, the new, I guess probably maybe just one level down from CMG. This one came down on very heavy volume and a big move. It hadn't been public that long, but of course, they're big into the chicken prices. And Buffalo Wild Wings, the same thing, BWLD. These things were forecasting the bird flu long before the bird flu news really started to come out. But all these chicken prices really starting to affect some of these restaurants.
Absolutely. You know, and the other thing that it's really affected, Dave, is the price of hogs. And we saw hogs, you know, hogs are interesting. And I want to there's a whole food motif that I kind of want to discuss with you this segment. We had hog prices fall to 72 cents a pound, which was pretty low. Back in, I think, March. Let me just look at that. Yeah, March 24th, it put up lows of 72 cents. Since then, we've rallied up to 82 cents. I mean, we're down a little bit now. We were up to, 86 cents. And this is all on this whole bird flu thing because, it's another white meat. So you're seeing that in the hog market. But on a more macro basis, what we're seeing, Dave, is that we are seeing the largest, most populous nation on the world just on a tear, securing food stuffs and supplies on a year after year basis. A year and a half ago, China bought Smithfield Foods. This year, they started a new company called COFCO. And what COFCO did was about a year ago, they did a joint venture with Noble Agricultural Trading Corp, which is a large commodities trading company in Asia. And they also, there's a company called Nadira, which is a big grain trader in the Netherlands. And they bought 51% stakes. They recently poached and hired one of the senior executives from Archer Daniels Midland to run COFCO. And they got a huge cash infusion from the big financing arm in China. And this company is going to be a major player along with ADM and Bunge, Louis Dreyfus and Cargill in the grain markets, this COFCO. And what this is just a continuation of China's policy to secure commodities flows for their 1.355 billion people. And eventually it's going to raise prices here for us because we're going to have to compete for foodstuffs, which with population rising is a finite resource. So you will be paying more for those chicken wings, Dave, in the future.
I won't be paying more for them. I'll eat cake. Anyway, you've got a new article about this on Seeking Alpha?
Yes. And actually, I have to thank you because you helped me with the title. You inspired me, the Kafkaesque. Let me give you the exact title of the article because I write so many of them that this one slipped my mind at the moment. I'll give it to you in a second. It's called Kafkaesque Activity in Grains. The Chinese Strike Again with COFCO. And I posted that article a little while before I came on the show in the den, so it's there, and really that the article is about what I just said, which is about China is just on a tear to own and secure foodstuffs around the world, and not just foodstuffs, other commodities as well.
Now, I wanted to get back something. We've got about 4 minutes left here in the show, and I wanted to just talk about it because basically you've been saying we're in a trading range in a lot of these different stocks. Where do you see that trading range in gold and silver and in crude and maybe even gasoline right now before we wrap up?
Last week I wrote an article on gold for Seeking Alpha. I called it boredom, and I just had a lot of snoring in the article, and I expect it to continue. Gold dropped from the top end of the range to the middle of the range, and at the top it looks great, at the bottom it looks terrible, and it goes back to the middle. And we're seeing that in a lot of different commodities. I think 2015, Dave, is a year for trading, not for investing. When profits are on the table, you got to scoop them up quickly. If you're a nimble trader, you're going to do well this year. Long-term trends, I think the only really strong long-term trend out there is the dollar, and I think we just saw lows put in, and I think we're going to start to climb again. As far as oil is concerned, listen, there are bullish and bearish factors at play. There's lots of oil around out there, but we are seeing some positives. The rig counts are down. Production's going to fall a bit in the U.S. We have a crazy situation in the Middle East. The ISIS took over another Iraqi city today. So there's a lot of things that can make oil go up, and I think the price shocks in oil are on the upside. But there's still a lot of production around and a lot of supplies, and I wouldn't be surprised to see oil fall back to $54 a barrel here. I just see range trading, and I think you buy dips and sell rallies in these things, and I think that's the way to play it at the moment.
So crude probably on the higher end of the trading range.
Yes.
Gold, what?
Smack in the middle.
1170 to 1225, something like that.
And I got to tell you, even though it was just up at 12 and a quarter, and a lot of people disagree with me, I think the risk is on the downside. I think that platinum and silver prices are screaming at us that gold are too expensive. The gold-silver ratio at over 70.5 to 1 is just too high, and the platinum discount to gold is telling me that either platinum and silver are too cheap or gold is too expensive. So I see the surprise move coming in gold on the downside.
It seems like it, or it's always seemed like me as more of an equity trader, that we get these weeks where there's not a lot of movement in equities, and everybody starts chasing the commodity prices around. It's almost like commodities never really sleep.
Right, they never do, Dave. They're 24/7, but you know what? Most people who run to the commodities, they forgot the last time they get clipped because they buy highs and sell lows. And in commodities, you got to do the exact opposite. You really have to trade these ranges. These are very volatile instruments. You go into something like coffee that has 5 to 7% ranges as the norm in a day trade. Very, very difficult. You really have to get into them when they're looking the worst and get out of them when they're looking the best. And if you kind of keep that in the back of your mind as something that'll stop you from taking an undisciplined position, I think you'll do much better than if you just kind of look for a new trend all the time.
Well, we're getting ready to go on a long 3-day weekend. What do crack spreads say for gasoline prices?
Well, right now, today, they're pretty much in lockstep, but the July gas crack is up 45 ticks. It's at 25.52, and we are coming into the most important long weekend, Memorial Day weekend, and it's driving season in the United States, and drivers are going to find gasoline prices $1 cheaper this year than they were last year at this time. And I think that's going to add to demand, and that's a positive for oil because it all filters down to the raw crude. Look, we as consumers, we don't buy raw crude. We buy oil products. So I'm kind of friendly to gasoline prices here.
Well, anyway, I want to thank you. We've got Basil Chapman in the next hour sitting in for Tom. I want to thank Andy Heck for joining me today, and we'll see you tomorrow, at least on my show. Same bat time, same bat channel. Remember to sell when you can, not when you have to.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. persevering. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's Gold Report.
You had too much money, man. That is so cool. But listen, man, I really appreciate that.
Now, Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for the one and only Tom O'Brien. This is the Tom O'Brien Show, and it is my pleasure to be here. Usually, I'm doing my 11 o'clock till noon Eastern Time show, Monday through Friday on market days, and it's called the Tiger Technicians Hour. And my service, my daily service, is the opening call. Very comprehensive look at the markets every day with positions that we're taking, and every day update where to put the stops, buy stops, or whatever it is that we're looking at. Now, what's really important about this market is that from Friday, there was this slightly very quiet stealth move to the upside. And essentially what we looked at was a sneak to a new all-time high above the 18,288s in the Dow. And today, where do we close? We close at 18,312 with a certain type of candle, doji candle. And if I'm looking at this is the chart on the left. If you're looking at my charts, for those of you who are always looking at my charts, you'll know that the left side is the daily, the middle is the weekly, and the right side is the monthly, the very long-term monthly chart. Right here, I usually put up the 120 if there's a question. My 120-minute chart says be a little careful here because there could be some kind of a pullback to make a peak tomorrow if there's no new high in the Dow above 18,351.36. You go 1 penny above that in the Chapman wave methodology, and you've extended this leg. And the leg is, at this particular point, I use certain technical tools. So I'm looking at the MACD, the moving average convergence divergence, just a very big name for two moving averages, and that's very positive. I'm looking at the stochastic at 94%. Anywhere in the mid-90s is just really strong. So I'm inclined more to think of this as new leg B, and that we should see higher highs over the next 3 to 5 sessions going to what I call the leg D. Let me just quickly do this here just to give you a sense of what I do. Let me move this chart over. There it is. And basically what we look at is we look at the most identifiable lowest low of any particular price movement and then start a wave count. And the wave count is very simple. I use uppercase letters on the way up, lowercase on the way down, and essentially what we're looking for are 4 higher peaks. Once we get there, other things can happen, but the objective is to try to get you to the 4th highest peak, and then we do an assessment as to see what exactly is going to happen next. Now, what is really important at this particular point is that the weekly chart broke out to a new high, and in this cup formation, there are a couple of things we've got to look at. For this cup formation to continue much higher, you need to see a close in the 18,300s in the Dow. I've said to my subscribers that we need to see a close in the 18,300s 3 out of 5 sessions for us to get the sense that the momentum is building in the technicals to be able to push us higher. If we start to fail, keep coming down into the 18,200s, that's going to suggest that we're going to make a peak E in the weekly chart within a week or two, and then you've got to be very careful because there could be another move to the downside. Let's look at the S&P, the SPX.X, that's how I get it. The S&P right at this moment is at 2,127.83, down $1.37. So there's a little bit of a mixed market right here. And in fact, I like that I'm seeing strength come into the Dow, even though it's just 30 stocks. Why? Because they have the cyclicals, they have the heavy duty stocks as well. They have the financials. It's a nice mix, and it's telling me that as long as there's some kind of leadership, and this is what's really missing in most, Home Depot was leading the pack. Now it's not acting all that well. And I had that sense about maybe 2 months ago that we were coming in for a slowdown in the economy. I called it a mini recession, although, it's really hard. Economists only talk about a recession way after the fact. It's very hard to perceive, but just based on all the technicals that I'm looking at. So let's just go on with this. The S&P right now, once again, I'm going to not call this a leg F. I'm calling it a B, where B says you should go to a C and a D. I'll be wrong if in the next 2 sessions the S&P breaks under 2115 closes decisively under 2115, and the Dow closes under, I'd say, 18,120. Now, what's really important about this particular move is that the very long term, I don't know if you've seen a chart like this before. Look, this is the S&P. This goes on for a long time. Look at that beautiful up channel. And I'm going to take this away just for the moment to make it clear. Look how this up channel steadily went towards that upper, I call it the inside track reversal zone, and then you see the price pull back, and what does it do? It goes to the buy zone, the inside track propellant zone. And look how it's walked the 9-period moving average, this black line here, moving average. That's a 9-period exponential moving average. Look how it's sitting nicely above it. It is in leg E. That's what I'm calling it for now. And if I had to extend this a little bit further, you'd see that that takes it a lot higher. That takes the S&P up to the 2187 if it's to get to the lower part of this Chapman wave inside track repellent zone. So the fact that it's been stalling here is saying to me there's a very big cap in the 2100 area. 21, I'd even say 2100 to 21, let's call it 30s, 2120 to 2130 area. So I'm going to be watching this very closely. And so far, what we're looking at is there's a change in the mood of the market. I call it the tide. When there's a bear phase, the market takes, just as it did early on last week and before that, and then it suddenly changed its character. What happens is, in a bear phase, even if it's a daily, not a weekly, but even just a bear phase in the daily, you will start to see the VIX, the volatility index. I talk about this a lot in my show and for my subscribers. Talk about this, and I'm talking about it in the sense that I call it buying pressure and selling pressure. Oh, it's made up of a whole bunch of things. It's the 24 and 36-day moving averages. It's out of the money puts and calls in the S&Ps. It's kind of a complicated thing that's worked out, but I like to make it simple. Buying pressure is when it's down in the 13, 12, 11 area. When it starts to get to the 14s and 15s, you start to see selling pressure. Keep it as simple as possible. And you can see that even the 9-period moving average in the weekly chart, and especially so in the monthly chart, has not been there. It's just been unable to close above that black line for a very long time. So let's move on and we'll look at the QQQ series. QQQ series, 109.86 down 20 cents, doing okay, not great, but this is what's really important. I believe that there's a chance that the VIX will go to a leg D, just above 111.16 in the next few days. It might fail just below it, but it's attempting to do that. And if you look at the weekly MACD, it's flat, which says there's a limit. There's an upside potential, but it's fairly limited. And if you look at the stochastic at 82%, it says, yeah, that's good. And it's also above the 9-period moving average. The moment you see a weekly close in the QQQ series, that's the Power Shares QQQ Trust series, which is based on the NDX 100, that's the NASDAQ index of the top 100 stocks. As soon as you see a close below 108, let's be a little safe here. Let's call it 108. I say be a little bit careful because that's going to be a lowercase h failure pattern that's unfolding. And at this particular point, you've got more like a V-shaped pattern or a cup formation. Remember, the market is made up of only 3 chart formations, if you want to keep it simple. A straight line move up and down, that's 1. An arch or an inverted V, that's 2. Or as you can see here, a cup formation or a V-shaped formation, and that's 3. And that's, if you keep it as simple as possible, it'll really help you. So the QQQ series, then we're going to go to, I'd like to go to gold. The gold right now is trading at minus 20. It's at 1207. This is the continuous contract. Now, you remember I was talking about those peak Ds, the 4th highest peak? Look what happened. Peak D. And you see this on, this is the daily chart. You see this coral colored moving average right there? That's called the 200-period exponential. Look what happens. It's a wonderful index, a wonderful tool if you can use it. Look how it was resistance once, then it became support, And now its resistance, it hasn't even been close to that level since the 6th of February. And it finally started to touch that, went too deep, pulled back sharply. Stochastic still at 91%, and the MACD is still quite good. So we're going to see, I'll talk a little bit more about it when we get back. And I just wanted to say that bonds, the TLT was down $1 at 118. Basil Chapman sitting in for Tom O'Brien. We'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman sitting in for the one and only Tom O'Brien. My pleasure to be here. It is the Tom O'Brien Show. And I'm just looking at ADSK. This is Autodesk down $1.89 at 56.51. And this is a very good example of how this charting methodology can help you. In the monthly chart, if it closes the end of May, underneath 55, it's at 57.52, trading at 56.51 after hours. That's going to suggest strongly that it's made some kind of at least a short to intermediate term top, especially if within, I'd say within 2 weeks, if it's trading in the 53s. Now, if it goes sideways here, that would confirm this. I've had one of the very few unusual chart formations in that it's gone to a peak B in the weekly chart, and it's rare to fail at a peak B with no other wave count that I can make. And that would have suggested that if there was a strong earnings report and it popped up 3 points or so to 59, then all of a sudden I'd be able to say, hey, there's a time cycle that says very soon they should be able to go just 1 penny above the 65 round number high. I always watch those round numbers back in the week of 27th of February, and then we'll go to C. So if it fails from here, that's usually not a very good sign to fail, not at a D, but at a B or a C. So we'll be watching Autodesk to see how it, overnight anything can happen. They still probably have a conference call and all that. And then Sarepta Pharmaceuticals is up 40%. So you never know in the biotech area where things are going to go. SRPT, I believe SRPT, is that correct? Yeah. Sarepta Pharmaceuticals, leg C in the daily closed at 1638, trading right now 2170. 2170 gets it right close to the 200-period moving average in the monthly chart. That is really extraordinary action. All right, let's go to our first caller. We got Max in Fort Lauderdale, I believe it is, Florida. Max, how are you?
Hi, Basil. I called you about a month ago on WBA.
Yes.
I sold half of my position around 88, and I wanted to get back in it. And I've been waiting here, and the monthly looks pretty good right here.
So what we were looking at earlier is, let me just see my wave count, A, B, C, D. A, B, C, D. They made a second D. So we're looking at Walgreen Boots Alliance Inc. I completely missed the Boots connection when I saw it just recently when you started talking about it, and I was doing the wave count. I said to myself, Boots. I thought Boots was an English company, so that's really very interesting. What's kept this market alive in many ways has been the fund managers are afraid to short in certain areas, certainly in the biotech area, because you just never know when there's going to be a takeover. And boy, that's all you need is a 40% rally after hours like Sarepta Pharmaceuticals. So let's just look at this. So you got out at 88 and things slumped all the way down. And if I remember correctly, we were looking to see how it would test 83.66, which was the low in April. So it went down. This is what I'm going to suggest to you. So you don't have any position right now, right?
No, I do. I have half a position somewhere way down at the bottom.
That's right. Okay.
Somewhere around 76.
Right, and that's what I was thinking of. That there was somewhere you had a core position, but I couldn't recall. Now let's just do this. I'm going to make two suggestions. You don't have to jump into this now because it's in leg C in a counter trend rally in the weekly chart. Still looks it doesn't look that good. The monthly chart is still holding very well. So I'm going to make two recommendations. One is you could have just a little nibble here at 85.83 for two reasons. The first reason is it could very well go to leg D, which will give you a little bit of comfort at 86.68. Which is less than a point higher, but at least it says to you, okay, it has enough energy to go higher. My biggest concern is that I would only want you to have a small position. Why? Because if it's going to have a base if it's going to form some kind of a base that allows it to try to get back to the all-time highs back in the 90s, the way I'm looking at it, I do not want to see any weekly close below 84. It's at 85, 84, and it's only 2 points away. I'll tell you why. The pattern that I was talking about, which I call the lowercase h, which is actually what we were looking at earlier on, that could form right here, and I'm going to draw it in to show you what I'm talking about. And the beauty about having a small position is that if it still has internal strength, and the monthly says, yep, there's still internal strength, the weekly says, oh, I don't know about that, then it should, by today's Tuesday, by Monday, no, Monday's a holiday, by next week, Wednesday, it should have, if there's any consolidation, it should have held the 85s, and it should actually have tried very much to get into the 86.50 to 87.20 area. And if it holds there, it means it might be forming a high-level consolidation without making the H pattern. And then you can call me up later in the week next week, and then maybe I'll say, okay, now you can add another small position. I don't think it's time to worry about the core position that you have, but I would tell you this, that if by the first week of June, if it's trading under 84, I'm going to suggest that you consider, I don't know if you ever use puts at all, but you might want to protect it with a put position, or you might want to lighten up just a little bit in your core position, only because the pattern says that if it starts to make that H formation, it could very well test 82.53. A close below 82.53, and you'll see that on the weekly chart there's a potential to look at this a little bit like a head and shoulders pattern. So I don't want to frighten you out of it. You've been in it a long time. You've done very well. I just want to say two positions. One is to start a little nibble right here with a very tight stop of 1 point, and it should quickly go towards the 86, 87 area. That'll be a positive, and we can start looking at maybe adding. But if it fails, then I want you to even think of not just the short-term position, but how you handle the core position. So nothing to do right now unless you want to nibble tomorrow morning. If it opens down more than 35 cents, I just wait a little bit. I wouldn't even nibble, because I don't want to see it even on the short term based on the 120-minute chart take out the support of 84.80, which is the 200-period moving average. I'm just afraid that if it pulls back under 85.35 or so, it could start to accelerate down. So this is a very critical level, not just for the very near term, but in chart patterns because of that lowercase h, which comes down sharply, bounces up, makes an arch formation, and then comes back and retests. That's the thing. I don't want to see you take your core position and see that profits start to shrivel. At the same time, I don't want to be responsible when you've already got very nice gains. I don't want to be responsible for you to get out too early. That's why I'm saying it's going to tell you very quickly, based on the chart formation, if it's able to garner 1 point to the upside, that's a positive. If it's 1 point to the downside, I'd be a little bit hesitant. Does that help you?
Yes, very much. Thank you, Basil.
Okay, well, thank you so much for calling, and let me hear from you again. I'd like to hear how it is, and I'm going to put it on my watch list because it's actually quite an important stock in the group, so I'm going to watch it closely. Thanks so much for calling, Max. We're going to be back. We'll be back with Mark and Fort Collins, and right now, let me tell you, the Dow was up 13, the S&P was down 1. Just a real quick look at the dollar. The dollar was, in fact, up 1.09 at 95.31. Nice strong leg A to the upside.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Basil Chapman. Dow was up 13 at 18,312. The S&P was down $1.37 at 2127. Comp index was down 8 at 5,070. The VIX index was at 12.85 of 12 cents. And you've got we've got the S&P futures down 2.25. Most importantly, you saw gold drop sharply. The GLD was down $1.62 at 115.90, and I had the dollar a moment ago. The dollar was up 1.07 at 95.30. A very strong single leg to the upside. in the daily chart. We're going to see if that will continue. We'll look at the euro just now, but we're going to go to Mark in Fort Collins, all the way down from Newton, Massachusetts to Florida. Mark, how are you?
Good. How are you?
I'm well, thank you.
So, what do you think about the XRT? It's ETF on the retail sector. The other one that I was looking at was the RTH. I took a small short position on it near the close.
Okay. Let's just this is a very important moment because the XRT is the SPDR S&P Retail ETF, and the RTH is not quite the same composite. The components are a little different. Chart patterns are pretty close. The market vectors retail ETF is the RTH. It closed down 43 cents at 76.55. It's made up of Walmart, Home Depot, Amazon, CVS, Lowe's, Costco. It's just Target, TJ Maxx, a whole bunch. In fact, TJ Maxx has been on a tear, and you've got Walmart on a tear to the downside. Now, what's really important about it is you might recall that it must be, time flies, maybe it's 2 months ago, I was talking about the chance that we were, based on the work that I was doing, that there was some kind of a slowdown. I called it a mini recession. I'm not an economist, so you'd even need, I think, 2 quarters of weak growth before you can even talk about a recession. So I'm not sure that would be the technical term, but most importantly, the work that I had looked at, whether it was the transportation index, whether it was the airlines, just a whole slew of factors said to me, there seems to be a slowdown here. And that's one of the reasons why I'd say that the market meaning the Dow and the S&P, will probably go either sideways if there's a rotational correction. My thinking was that at some point the Dow would break 17,500 and pull back deeper, and that would give us that wave that I'm talking about. If anyone does Elliott wave, that would give wave 4 to the downside before we got 5, spectacular 5. So instead, we've used up time. I'm still of the opinion that this is a rotational correction, even though we've gone to higher highs. And that's borne out. If I look at the XRT, and the XRT is trading right now down 68 cents at 98.93. It made what I call a rogue wave. After it made a peak E, it suddenly spiked. Sorry, that should be an F. I meant to put an F there instead of a G. It made a rogue wave spike to the upside to 102.50, and that was in March. That was in the middle of March. It was, in fact, the end of March, 31st of March. Then went a little bit sideways in a rectangle formation, and now what it's doing is making lower lows and lower highs. So this is a very important moment. Why? Because you've got a left side, right side arch formation, a time factor that's involved. You've got the low that was made just recently of 96.23, which is even lower than the low that was made on the 10th of March at 96.89. And you've got, this is the first sign of strength that you've got in the technicals, the MACD and the stochastic. The price has rallied, but it hasn't. If yesterday, today, or tomorrow takes out the 99.88 high of the 8th of May, I will then say, okay, let's see how far this can go, because the technicals on a short-term basis are saying there's strength. But if you look at the weekly chart, the technicals are very poor. If you look at the monthly chart, the technicals are way weaker now than they were even at their previous peak. So now you've taken a position in the RTH, which is just, as I say, a slightly different pattern, and it is the Market Vectors Retail ETF. And I just wanted to look at this. So, folks, just be aware that the XRT, let me double check, the XRT, yes, there is just a complete difference in the volume between the two. I know that sometimes people have tried to short the RTH. It's not always easy to do, but you've managed to do that. Now, this is what I'm looking at. The pattern in the RTH is a little bit different because I can make a cup formation, and the chance that there's a right shoulder failure here, one of the reasons why I'm saying that is that there was a very sharp move in the stochastic. MACD was good, not great, but good. And then today it opened at 77.19, went just 7 cents higher, and then closed way down at 76.55. I'm sure Home Depot, maybe Home Depot and Walmart were involved there. But I think that you have your eye on the prize right here. And the reason I say that, do you have options, or are you actually short?
No, it was the XRT, not the RT.
Oh, you actually went to the XRT. I was just going to say,
Yeah.
so I know that it's sometimes tough to short the RTH. Okay, XRT, and that's an S&P Select Spider. It's the retail ETF. Now, this is what I'm going to say to you. I have a slightly different pattern. The pattern in the XRT becomes more potent to the downside, but it needs to take out 96.23. It needs to close below 96.23, and it needs to do that within 3 to 5 sessions. I just don't know if it's going to do that for once in that time frame, because I see just enough strength in the Dow and the S&P to kind of worm their way a little higher over the next year, through the long weekend. At least it looks like it could be into or through the long weekend. And then the following makes us kind of vulnerable to a down move. So this is what I'm going to suggest. You said you've started a small position?
Well, no, I bought some 98 June puts.
Oh, you did. Okay, that's what I need to know. You got the June puts. So this is 98 June puts. I think this is it's a perfect trade, because you've got, let me, if I can just do this for 1 second here, look at my calendar. So you've got still, the May just concluded. Oh, so you've got about 4 weeks, right?
Yep.
Okay. I don't feel uncomfortable at all saying to you that I think that your position should garner good profits. The only thing that I have to say to you is what to be aware of if it goes against you. And you will know it's going against you if by Wednesday, not tomorrow, a week from tomorrow, if the RTH is just, because, it's a mix of so many different retails, and it's a story of it's a bifurcation in most of the sectors. Even in the IBB, you've got a bifurcation between the biotechs that are doing really well and the ones that are really stalling. So you've got the same thing here. It's one of the reasons why I think there is a cap on the upside in the market. So I'm going to say to you that if by Wednesday week we're trading between 100.90 and 101.50, and we haven't broken down yet, that says that when the down move does come, I'm going to advise you to take, at the first big drop, to take a little bit off. Why? Because then it'll be showing a little bit more strength than you actually want to see. And it's based on the monthly chart, which at this point, with a week to go, is still looking quite good. That's all I'm going to say. But I don't want to interfere with your position. I think that your timing here could be really good, because I see a test of 100.50. I don't see it actually closing and holding there for more than a day or so and then coming back. It looks like you're going to see a series of arch formations. So I think you've got the right. I think you got the right idea right here. And I don't feel uncomfortable, but if it breaks into the 102 area, I don't have to tell you, this is a resilient market. This is the ever-ready bunny. So that would say, there are enough. There's just enough retail stocks left that are doing well to foil you into June for a little bit. But I think going out 4 weeks, it looks to me in 4 weeks' time, we could be looking at 96 to 94.
Perfect. Thanks.
Thank you so much for calling. Always appreciate it. That's Mark in Fort Collins. And let's do this. I wanted to cover just to show you something. This is the continuous contract in the commodities. This is the, hello? This is the corn. This is the corn contract, and the corn contract is saying, haven't got any strength at this particular moment. Now, folks, what is today? Today is Tuesday. You've got a program coming up, and the program is all about commodities. It is outstanding. Andy Hecht, I absolutely recommend you listen to it. Even if you don't do anything with commodities, you don't even know what commodities are, listen to Andy. You will get a wealth of information. That's what we try to do here at TFNN. We're trying to impart to you our years, decades in many cases, of experience. So I'm looking at the corn contract, and if you look at the monthly chart is making that pattern. I keep talking about the H pattern. Look at the W. This is wheat. Wheat shows a little bit more strength, not in the monthly, but in the weekly. And we'll talk about that when we get back. Basil Chapman sitting in for Tom O'Brien. Did I finish gold as a question of the day? I will get back to gold. I do want to talk about it in relation to the dollar. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say You can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Hi folks, Basil Chapman sitting in for Tom O'Brien. This is the Tom O'Brien Show, and straight after the show, you're going to get Andy Hecht, the Commodity Hour. Great show. So we're looking at, I looked at the corn, corn. And the corn is, in fact, not holding very well at all. But wheat was a little bit better. It had a little bit of a bounce, and it's saying that although the monthly chart is still very poor, it is saying from the 120-minute chart, made that peak D. Remember the fourth highest peak we look for? It's pulled back, but it's saying that if at 510.5, if it can hold above 504 in the next 2 days and try to get to 516, all of a sudden you might see a leg D to the upside in the daily, and if it can get anywhere close to 532 in the next week, that's going to be tough. But let's just say it can, then the magnet becomes 543, the 200-period moving average, but it's already had a spike to the 32-day moving average in the weekly chart and has pulled back. So this for commodities, I've been talking about this for a while, about the commoditization of commodities, that there's just a glut of everything, the glut of cars, the glut of everything, and costs are coming down in many ways. The choice is yours to overpay for a car, but you can get a fantastic automobile for around $21,000-22,000 if you're looking for it. So I think that this is a very interesting period because in many cases you've got inflation. There's inflation by choice as well. If you're looking at Northeast real estate, in my show, I get much more into that, and for my subscribers, I get much, much greater detail. But in fact, what we're looking at here is a situation that is rife with conflict between the good and the bad. Is there going to be a deflation? Is there going to be an inflation? So I showed a chart, I think it was this morning I must have, this is the long-term Dow chart. This is the daily chart. Make it as simple as possible. You see this magnificent from March the 6th, you see this magnificent up channel? Look at that up channel. And look at the way it traded in the upper part of the channel. Then it traded in the middle part of the channel. You see there's a strong red line. And I don't know if you can see it. Let me just check if I can see it here. Yes. If you're looking at this particular chart, you will see that there's a little green line right there, dashed green line. We are trading in this very narrow band, but you see the length of the moves to the upside, how they're starting to get shorter and shorter. You see how what was, in fact, a support line has become a resistance line. So I'm going to be looking at that really closely over the next 3 to 5 trading sessions. How does this work out? Are we going to have another pullback, and are we going to test that green line? Are we going to break out to the upside into the Dow 18, this is the Dow chart, into the 18,300s decisively, and then break into the 18,400s, which would be really important? Or is the consolidation still continuing? And that's going to be very important. I was asked about gold. I showed the GC chart. This is a continuous contract, having made a peak D right at the 200-period exponential moving average. But look at this pattern right here. I'd written this, drawn this ages ago. In fact, I'd shown it in the GLD about a year and a half ago, that there was this pattern that was unfolding. It's a devastating pattern. If you don't identify it, you can constantly keep thinking that you're going to break out to the upside, and all you're doing is going to the upside and then pulling back, testing the downside. And as you think it's going to break down, it goes back to the upside. It's a rectangle formation, even though it's made up of arch formations, and that's the pattern that I drew. The H goes into a lowercase continuous M pattern. Looks like the worm. What is the little worm that had to eat the lettuce? What was it? Oh, I love that fly. I used to read to the kids. The hungry grasshopper, the hungry caterpillar. It looks like a caterpillar, right? So what we're looking at here is that there isn't real strength in gold. But one of the reasons is that gold is held very well when you consider how well the dollar has done. And even in the move down, where the gold had an opportunity to rally, it didn't. So it's saying, this is saying to me, that there's a deflationary aspect going on. Gold is also not a currency of fear, and that you can have trades in the gold market, gold stocks. Some have done beautifully, and others are just stalled. And what I'm really looking at is how does the dollar contract take the single leg A up? I have something that I call the single leg syndrome, single leg A. If the dollar at any point in the next 3 weeks, instead of pushing into the 96s and holding, starts to pull back and goes under 94, that's saying, dollar's not ready. And the Fed, in fact, I think would like to see a weak dollar. And I think that they would prefer a weak dollar than even seeing rates rise. Although the rates rising now is doing for the Fed what they don't have to do. Look at this. This is the weekly chart. This is the 30-year T-bond yield. This is the 10-year T-note yield. And this is the 5-year. The 5-year has been stuck in this little range here. The 10-year has gone to a leg C, possibly a peak C if there's no new high this week. And the weekly chart of the 30-year is spiked. But basically, we're still in a range that we've been in for a long time. So yields have not really done all that much. So that's going to be very important. How do they act? How do they react in the coming weeks? Here's another chart that I think is really important. This is the chart of the iShares Global Timber and Forestry ETF. It's stalled at a peak E. It's pulled back. It's in the up channel. It hasn't broken it. Went to the inside track buy zone. It's trying to rally. If at any point trading now at 55.40, if you see this ETF wood, W-O-O-D, start to trade at 52.20, that's a very big negative, and that's going to impact the housing market. The housing market's making this pattern. I drew it in. It's the rising wedge formation. Very often the pattern conforms to a cup formation afterwards. Does it take out the old high? Even if it does, that's usually a double top formation. But does it failure right shoulder pattern? So what I'm looking at here says that we are at a very critical level over the next week. Why? Because the VIX index is going to tell us a huge story if it starts to suddenly. It'll happen very suddenly. If you start to see fund managers saying, now's the time to be buying insurance, you'll start to see the VIX index finally move and sustain higher highs and higher lows. Until that happens, until it gets to the 15.5, 16 area, they are just spikes, and at some point they come back down again. But when it starts to sustain it 2 out of 3 weeks in a row up in the 15s, that'll be the first sign, 15.5 and higher. That'll be the first sign to say trend change of significance. Up until then, you've got at least residual strength, and that residual strength is saying you can look at some stocks individually going higher, and some of the indexes can go a little bit higher, and then we've got to be careful. This is Basil Chapman sitting in for Tom O'Brien. Stay tuned for Andy Heck. My service is the opening call. Check it out on the front page of TFNN. The other thing is, call me at my show tomorrow at 11 o'clock. Love to speak to you. Have a great evening.